Something absolutely unprecedented just went down behind closed doors at the Fed. The U.S. Senate just greenlit Kevin Warsh as the brand new chair of the Federal Reserve. It was a brutal, hyper-divided 54-45 vote, the most partisan confirmation battle for a Fed chief in modern history. But Wall Street isn't panicking over the vote count. They're terrified about what happens next. U.S. inflation just surged back to 3.8% as global oil prices explode higher. Americans are watching savings evaporate while retail investors get crushed by violent market drops. And now, an internal civil war has officially erupted inside the world's most powerful central bank. Normally, when a new Fed chair takes power, the old one quietly disappears. But Jerome Powell just broke the rules. He announced he's refusing to leave the Board of Governors. For the first time in over 70 years, an outgoing Fed chair is staying behind to challenge his own successor. Why? Because the independence of the Federal Reserve is under siege from Washington. The White House has been demanding aggressive rate cuts to keep the economy artificially alive. But Kevin Warsh is not entering office to print easy money. He believes the Fed made a catastrophic mistake by flooding the economy with post-pandemic cash. His mission is to aggressively shrink the Fed's massive balance sheet and drain excess liquidity from the system. Now the stage is set for a historic power struggle over the future of the US dollar. So what does this elite financial warfare actually mean for your money? In simple terms, the era of cheap money is officially dead. If Warsh begins unloading treasury bonds, long-term yields could skyrocket. Mortgage rates are already swinging wildly, freezing millions out of the housing market. Credit cards, auto loans, and monthly payments are about to become painfully expensive. Wall Street is finally realizing that the massive rate cuts everyone expected may never arrive. That's exactly why overvalued AI and tech stocks just suffered a brutal sell-off. The smart money adapted instantly. The retail crowd got trapped. If you want to survive this economic shift, your strategy needs to evolve immediately. Blindly chasing hype stocks during institutional volatility is financial suicide. The smart money is rotating into defensive sectors, commodities, and cash flow-heavy assets. And while rates stay higher for longer, traditional banks are quietly destroying your purchasing power. High-yield savings accounts and modern neobanks are now offering yields above 4.5%. That creates a safe financial bunker while Wall Street fights its internal war. If you want to stay ahead of these massive economic shifts and protect your wealth, subscribe now. We break down the Fed's hidden moves every single week so you can make smarter financial decisions before the market reacts. Stay sharp, stay diversified, and I'll see you in the next video.